Hey everybody, it's Dave Poxon again. So in this video what we're going to do is, this is talking a little bit about the concept of trading theory. And in this theory video what we really want to talk about is we want to talk about kind of what works within the market and sort of trading time frames and those particular issues. So the first question that first sort of concept or idea that I kind of want to propose and let people have a look at is that generally what type of process would work within the marketplace. And I'm not really going to go into great detail with this particular video talking about sort of the algo trends process. If you've sort of seen some of the videos on the algo trends, you'll understand what you're looking at kind of at the bottom. But in this particular case, what I really want to do is I want to highlight the idea of trend versus chop, and then I'm going to talk about shorter term time horizons, and I'm going to talk about longer term time horizons. But in this particular case, what I really want to do is I want to kind of let people see the difference between what works within the forex market and the type of trading system, type of trading that is more profitable. So in this case, what I'm going to do is I'm going to load up 3 years worth of data on these individual trading systems. Okay, so in this particular case, this is the Euro US. I'm sorry. This is the Japanese yen, the USD JPY pair, and I just wanted to kind of let people see a couple of different systems. So basically, we're monitoring roughly about the same time horizons. The system that I've highlighted here at the top. So this particular system is a trend-based trading system, and the system at the bottom is a chop trading system, or swing type trading system. So, and for those of you that aren't kind of familiar, the trend-based system looks for sort of a breakout in price and wants to kind of let a trend develop, and it will ride the trend until there's a reversal in trend. And so the opposite is true for the swing system, whereas the swing system wants to actively trade periods of up and down, and basically tends to perform well when the market is choppy and directionless, whereas the trend-based system tends to perform well when you get a trend that has developed, and volatility is a little higher based on sort of the time frame that we're looking at, but does not do well when the market tends to go into a sideways period. So the first thing we'll look at with that is we'll just simply look at the basic math and the numbers, and they're pretty obvious. So in this case here, I'm going to highlight the trend-based system. I'm going to show you the 3-year equity curve of the trend-based system. So in this particular case, what we're looking at is a trend-based system that has approximately 45,000 pips. 4,500 pips of performance. And what's notable in this is that you'll notice that although there is quite a bit of chop within or spiking within the equity curve, overall, if you take more of a bias towards looking for bigger moves, what you're going to do is you're going to have a lot of success with this particular trading system. Now, when I highlight this system here, I'm going to get a change in the equity curve. So over the past 3 years, we can see the exact same principle, but almost in reverse. So from a quick aside, and what we really want to understand is that you're far better off to be looking for larger trades or trend-based trades that occur. Because when you lock into a winning trade, it tends to be much more profitable than the series of losing trades versus the short-term trading systems. And this is kind of one of the pitfalls that most investors and traders fall into, is that because everybody wants to be right all the time, they want to feel good about being right, they tend to want to go with what they think is going to be right. And so in this particular case, I just wanted to highlight the percentage success rates, because it really underscores the point that I'm trying to make, is that in this particular case you have a chop-based system that overall is not very profitable, because when you win smaller than when you lose, but it's a 60% success rate. Whereas the frustrating thing about trying to trade a chop-based system is that it has a much lower success rate. So in this particular case, this chop-based system is only showing a 41% success rate. So the idea, however, is if you can combine both of these systems with the algo trend process, we believe that you can actually profit and be able to farm out periods of when they're performing well and periods of when they're not. Because it's not to say that you can't make money trading a trend-based system. It's just that you have to understand that there's going to be periods where the trend-based system is going to produce a lot of success. So this is a period over the course of 3 months where in this particular system the trading was about 90% success. And you can see here that the value of those trades was about $8,000. But you can see that once the trading system and the volatility begins to pick up, you have a series of 3 losing trades that you end up giving back, all the success that you made in here and then some. And the critical thing to understand is that this is generally the trend that occurs over time. And so if you're going to be a trend-based, or pardon me, a swing-based trader, you need to realize that when is the best opportunity for me to get into and out of a trend-based system. And we'll talk a little bit more about that in advanced strategies. Now, the other question that I want to kind of pose to people is time horizons. So in this particular case, what we're looking at is we're looking at the equity curves over the past 3 years on time horizons. So I'm going to load up the individual trade systems for the yen here. And I'm going to set them all for 3 years, and I'm going to show you the individual equity curves. And the issue, or my belief system is, and it's the old saying that by the mile it's a trial, by the yard it's hard, by the inch it's a cinch. And I realize that that's generalizing, but the reality is that the shorter you can kind of make your trade horizon, the more profitable you will become, because trying to pick longer cycles or bigger trades comes with larger drawdowns, and it becomes with lower success rates. And so we're going to highlight that information as soon as this particular chart loads up. And now I realize that not everybody's going to be able to be actively involved, and so the algo trend process does allow for investors to decide and look for different opportunities when they occur, or our algo trend ideas, where we will look at this type of trading system which is not available in the algo trend window, but we can kind of pump this through in our algo ideas. So the first thing I'm going to do is I'm going to look at a 3-year performance curve for a longer term trading system. So this trading system has less trading than than the other 3 trading systems that we're going to look at. You can see that there's quite a bit of swing. There's about 200 pips of performance, pardon me, 2,000 pips of performance, and you can see that this trading system has considerable swing relative to its upward slope. But again, the critical thing to understand is it's a trend-based system, and this particular type of process does allow for a trader to have a 2 to 3 month horizon where they'll be able to make some profit on volatility pickup in the end. But again, it's got fairly upside. It's an upward sloping equity curve with a fair amount of up and down, which traders have to go through. So they're a little bit more active trading system looking at a shorter term duration is right here. So I'm up in the top right. So again, the first thing we can look at over the 3 years is we'll notice that we've gone from a performance increase from 2,000 pips to about 4,500 pips. And what we'll notice here is that we'll notice that the relative performance of the equity curve, although other than the period of relative flat back in at the start of our period, for the most part, this particular type of trading system has performed pretty well. And so the third example that I'm going to use, which is the trading system here on the top left, this is the shortest trading system. It still can ride some pretty good trades, but it gets you in and out. But again, this is looking for a little bit more active investment, and now we can see that in this particular case we've gone from 2,000 pips down here to 4,500 pips. In this particular case, we haven't quite doubled our performance data, but in this particular case, we see that this is a trading system that has generally performed better. And so the key to understand when it's talking about trading systems and trading system duration is in general, you're going to perform much better if you have the ability to be shorter term. So with our algo trend programs, our algo trend windows, the primary focus of our algo trend trading systems is short term. Now, here's the critical thing. You don't really need to necessarily be actively trading the system all the time, but what you really want to do is you want to be able to piggyback or find trading systems that are going to be successful over time, based on your time to pick a trade off, or when you can trade, or the research that we would provide. You're better off to obviously follow the shorter term trading systems. So just to recap, what works in the trading system business. It's pretty straightforward, right? You have trend-based breakout systems in foreign exchange are obviously something that's going to perform much better than the chop model, but both of them have an opportunity to produce if you utilize the tools of the algo trend. And if we're going to focus on looking for individual trading ideas, what you really want to do is you want to kind of focus your attention shorter term, by taking clusters of trades as opposed to trying to pick that 1-3 week trade in the market, because you're going to have higher levels of drawdown, you're going to have lower success rates, and it's going to lead to a frustration from trading. Anyway, that's it.